ExamPrep.School, Wyoming Property Insurance Producer Exam, Exam Code 12-WY-3 or OP-WY-03. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Common statutes and regulations, insurance terms and related concepts, policy provisions and contract law, property and casualty specific statutes and regulations, types of policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following dwellings would be ineligible for coverage under a standard HO3 homeowners policy? A. A 3-family dwelling where the insured occupies 1 unit as a primary residence. B. A single-family vacation home occupied seasonally by the insured. C. A duplex used exclusively as a rental property with no owner occupancy. D. A condominium unit used as the insured's principal residence. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer is that the HO3 requires owner occupancy of at least one of the dwelling units. A property used exclusively for rental purposes with no owner living on the premises is not eligible. Reason A is not correct. This property meets the owner occupancy requirement because the insured lives in one of the units. Reason B is not correct. Secondary or seasonal residences are permitted under the HO3 as long as the insured occupies it at least part of the year. Reason D is not correct. A condominium unit used as the insured's principal residence satisfies the occupancy requirement. Question 2. Under a special form, HO3 homeowners policy, which statement best describes the coverage basis for dwelling and personal property? A. Dwelling and other structures are covered on a named perils basis, while personal property is covered on an open perils basis. B. Dwelling and other structures are covered on an open perils basis, while personal property is covered on a named perils basis. C. Both dwelling and personal property are covered on an open perils basis. D. Both dwelling and personal property are covered on a named perils basis. The correct answer is B. The correct answer is that the HO3 provides open perils coverage for the dwelling and other structures, while personal property is insured only for the specifically named perils. Reason A is not correct. This reverses the actual basis. The dwelling is open perils, not named for HO3. Reason C is not correct. Personal property under HO3 is not insured on an open perils basis, but on a named perils basis. Reason D is not correct. The dwelling under HO3 is not limited to named perils, but is covered for all risks except those specifically excluded. Question 3. Under an HO2 broad form homeowners policy, losses to personal property are settled on which basis? A. Replacement cost without deduction for depreciation. B. Actual cash value at the time of loss. C. Functional replacement cost. D. Market value at the time of loss. The correct answer is B. The correct answer is that the HO2 settles personal property losses on an actual cash value basis, which factors in depreciation at the time of loss. Reason A is not correct. Replacement cost coverage without depreciation is not provided for personal property under HO2. Reason C is not correct. Functional replacement cost is not a basis used in HO2 for personal property losses. Reason D is not correct. Market value differs from actual cash value, which is the standard settlement for HO2 personal property. Question 4. What is the maximum off-premises personal property limit under coverage C of an HO5 comprehensive form homeowners policy? A. 5% of the coverage C limit. B. 10% of the coverage C limit. C. 25% of the coverage C limit. D. 50% of the coverage C limit. The correct answer is B. The correct answer is that the HO5 provides worldwide personal property coverage up to 10% of the coverage C limit for property temporarily away from the insured premises. Reason A is not correct. 5% is below the standard off-premises limit under an HO5. Reason C is not correct. 25% exceeds the customary 10% off-premises limit. Reason D is not correct. 50% is well above the policy's specified off-premises percentage. Question 5. After a covered peril renders a homeowner's dwelling uninhabitable under an HO8 policy with a dwelling limit of $200,000, how much additional living expense coverage is available? A. 30% of the dwelling limit. B. 10% of the dwelling limit. C. Actual additional living expenses incurred. D. 50% of the personal property limit. The correct answer is B. The HO8 policy provides additional living expense coverage equal to 10% of the dwelling limit, so 10% of $200,000 is $20,000. Reason A is not correct. The 30% limit applies to some HO forms but not to the HO8 form. Reason C is not correct. The policy limit is a fixed percentage, not unlimited actual expenses. Reason D is not correct. Personal property limit is not used to calculate additional living expense. Question 6. A homeowner with an HO3 policy carrying an ordinance or law endorsement with a 10% sublimit on a $300,000 dwelling faces $25,000 in code upgrade costs after a fire. How much will the endorsement pay for the upgrades? A. $2,500. B. $30,000. C. $300,000. D. $25,000. The correct answer is D. The endorsement pays for actual ordinance or law upgrading costs up to the 10% sublimit. 10% of $300,000 is $30,000, but actual cost is $25,000, so it pays $25,000. Reason A is not correct. $2,500 is only 1% of the dwelling limit, not reflecting the 10% sublimit. Reason B is not correct. Although the sublimit is $30,000 payment, does not exceed actual costs incurred. Reason C is not correct. This amount exceeds both the sublimit and the actual cost. Question 7. An HO3 policy includes an extended replacement cost endorsement at 120% of the dwelling limit. If the coverage limit is $200,000 in rebuilding cost after a covered loss is $230,000, how much will the insurer pay under the endorsement? A. $200,000. B. $240,000. C. $230,000. D. $180,000. The correct answer is C. The endorsement extends coverage up to 120% of the dwelling limit, $240,000, but payment is limited to the actual replacement cost of $230,000. Reason A is not correct. This is the base limit but does not account for the higher rebuild cost allowed by endorsement. Reason B is not correct. This represents the maximum endorsement limit but exceeds the actual reconstruction cost. Reason D is not correct. This is below the reconstruction cost and does not reflect either limit or cost. Question 8. A homeowner carries an HO3 policy with inflation guard, increasing the $200,000 dwelling limit by 4% annually. After 2 years without resets, what is the updated dwelling limit? A. $216,320. B. $212,000. C. $208,000. D. $224,000. The correct answer is A. The limit increases by 4% each year. $200,000 multiplied by 1.04 equals $208,000 after year 1. Then $208,000 multiplied by 1.04 equals $216,320 after year 2. Reason B is not correct. This 6% total increase is incorrect for compounding two 4% adjustments. Reason C is not correct. Reflects only the first year 4% increase, not 2 years. Reason D is not correct. This applies two 10% increases or miscalculates compounding. Question 9. Under the ISO, Commercial Building and Personal Property Coverage Form, CP0010, improvements and betterments made by a tenant to the described premises are insured under which coverage part? A. Coverage A, building. B. Coverage C, personal property of others. C. Coverage B, business personal property. D. Coverage D, loss of business income. The correct answer is C. The correct answer is coverage B, business personal property. Because tenant-installed improvements and betterments are treated as business personal property rather than part of the building or another coverage part. Reason A is not correct. Building coverage applies only to structures owned or leased by the insured and does not extend to tenant-installed improvements. Reason B is not correct. Personal property of others covers property belonging to third parties, not the insured's own improvements. Reason D is not correct. Loss of business income is not a coverage part in CP0010 and does not apply to tenant improvements. Question 10. Under the ISO, Commercial Building and Personal Property Coverage Form, CP0010, if an insured fails to meet the coinsurance requirement, the insurer's payment is calculated by which of the following formulas? A. Amount of insurance carried divided by coinsurance percentage, multiplied by loss minus deductible. B. Coinsurance percentage divided by amount of insurance carried, multiplied by loss minus deductible. C. Amount of insurance carried divided by amount of insurance required, multiplied by loss minus deductible. D. Amount of insurance required divided by amount of insurance carried, multiplied by loss minus deductible. The correct answer is C. The correct answer is amount of insurance carried divided by amount of insurance required, multiplied by loss minus deductible, which applies the proportion of coverage actually carried relative to the required amount. Reason A is not correct. Dividing by the coinsurance percentage rather than the required insurance amount misapplies the penalty formula. Reason B is not correct. Reversing numerator and denominator incorrectly calculates the insurer's share. Reason D is not correct. Inverting the ratio results in an overstated payment and is not how the coinsurance clause operates. Question 11. Under the ISASO business income without extra expense, coverage form, coverage for business income loss commences when which of the following occurs? A. Direct physical loss or damage at the insured premises causes a necessary suspension of operations. B. A civil authority prohibits access following a covered loss. C. Indirect loss of market demand due to a covered peril. D. Voluntary suspension of operations for routine maintenance. The correct answer is A. The correct answer is direct physical loss or damage at the insured premises that causes a necessary suspension of operations, which is the trigger for business income without extra expense coverage. Reason B is not correct. Civil authority shutdown is an extension of business income coverage, not the primary trigger under the without extra expense form. Reason C is not correct. Loss of market demand is an indirect result and is not a trigger for this coverage. Reason D is not correct. Routine maintenance is a voluntary suspension and does not activate coverage. Question 12. Under Standard ISO business owner's policy eligibility criteria, An apartment building qualifies only if it does not exceed which number of dwelling units? A. 6. B. 4. C. 8. D. 10. The correct answer is A. The correct answer is 6 dwelling units, since an apartment building must have no more than 6 units to be eligible for a business owner's policy. Reason B is not correct. 4 units is too low and underestimates the maximum allowed for BOP eligibility. Reason C is not correct. 8 units exceed the BOP's eligibility limit for apartment buildings. Reason D is not correct. 10 units are beyond the policy's maximum unit threshold for this coverage. Question 13. A business owner purchases a business owner's policy BOP for a retail store and adds the optional replacement cost endorsement for the building. Which condition must be satisfied at the time of a covered loss for the endorsement to provide replacement cost settlement? A. The building's limit must equal its actual cash value at the time of loss. B. The building must be insured to at least 80% of its full replacement cost. C. The endorsement must be added within 30 days of the policy inception date. D. A post-loss appraisal must confirm the replacement cost before settlement. The correct answer is B. The correct answer is that the building must be insured to at least 80% of its full replacement cost when the replacement cost endorsement applies. This requirement prevents underinsurance and triggers replacement cost settlement rather than actual cash value. Reason A is not correct. Aligning the limit to actual cash value provides no inflation protection and would default to actual cash value settlement. Reason C is not correct. There is no 30-day deadline. The endorsement must be enforced before a loss but is not constrained to that specific timeframe. Reason D is not correct. Replacement cost is determined by policy provisions and insured value, not by an appraisal after the loss. Question 14. A small manufacturer's facility is covered by a BOP that includes an inflation guard endorsement tied to the Consumer Price Index CPI. Halfway through the policy term, construction costs surge 12%. How will the inflation guard endorsement adjust the building coverage limit? A. It increases the limit immediately by the full 12% surge. B. It prorates the 12% over remaining months and adjusts at renewal. C. It increases the limit by the CPI percentage at the next policy anniversary. D. It requires the insured to request any adjustment in writing. The correct answer is C. The correct answer is that the inflation guard endorsement applies the CPI percentage at the next policy anniversary, automatically increasing the coverage limit then rather than immediately or by proration. Reason A is not correct. The endorsement does not provide immediate midterm adjustments. It applies at the anniversary. Reason B is not correct. Prorating monthly is not how the standard inflation guard endorsement functions. Reason D is not correct. No insured request is required. Adjustments are automatic based on CPI. Question 15. A developer secures a builder's risk policy with the completed value form for a new office complex, estimated at $5 million. A fire causes a total loss, and the actual completed cost is found to be $5.5 million. How will the insurer settle the claim? A. Pay $5.5 million minus the deductible. B. Pay the actual cash value of the loss. C. Pay proportionally based on the ratio of estimated value to actual cost. D. Pay the $5 million policy limit minus the deductible. The correct answer is D. The correct answer is that under the completed value form, the policy limit equals the estimated completed value, $5 million, so the insurer pays up to that limit less the deductible, even though actual cost exceeds it. Reason A is not correct. The completed value form does not increase the limit after a loss to match actual cost. Reason B is not correct. Actual cash value is not used when the completed value form specifies a stated limit. Reason C is not correct. Builders' risk policies under this form do not use a coinsurance-like pro rata calculation. Question 16. Under the National Flood Insurance Program, NFIP Emergency Program, what is the maximum building coverage limit available for residential properties? A. $35,000. B. $50,000. C. $75,000. D. $100,000. The correct answer is A. Under the NFIP Emergency Program, residential building coverage is capped at $35,000 while contents coverage is $10,000. Standard program limits are higher but do not apply in the emergency phase. Reason B is not correct. That limit corresponds to certain preferred risk policies, not the emergency program. Reason C is not correct. No NFIP program offers a $75,000 building limit under the emergency program phase. Reason D is not correct. A $100,000 limit applies only under the regular NFIP policy for contents, not emergency program building coverage. Question 17. What is the standard waiting period after application and premium payment before an NFIP standard flood insurance policy becomes effective? A. 0 days. B. 15 days. C. 30 days. D. 60 days. The correct answer is C. The NFIP standard flood insurance policy generally has a 30-day waiting period from application and premium receipt to policy effectiveness, except for certain map change exceptions. Reason A is not correct. Immediate coverage applies only in narrow exceptions, not the general waiting period. Reason B is not correct. A 15-day period is not used in standard NFIP policies. Reason D is not correct. 60 days exceeds the actual 30-day NFIP waiting period. Question 18. Under NFIP definitions, which condition qualifies as a flood? A. Inundation of 2 or more acres of normally dry land or of 2 or more properties from overflow of inland or tidal waters. B. Overflow of a single property's sump pump discharge. C. Flash flooding confined to one city block. D. Seepage through foundation cracks without surface inundation. The correct answer is A. The NFIP defines flood as a general and temporary condition of partial or complete inundation of at least 2 acres of normally dry land area, or of 2 or more properties due to overflow of waters. Reason B is not correct. Sump pump discharge is not considered overflow of inland or tidal waters. Reason C is not correct. Inundation must affect at least 2 acres or properties, not a single block. Reason D is not correct. Seepage without surface inundation does not meet the NFIP flood definition. Question 19. Which of the following basement-located items is covered under the NFIP standard flood insurance policy? A. Sump pump installed below the lowest elevated floor. B. Built-in kitchen appliances in a below-grade basement. C. Panel boards mounted below the lowest elevated floor. D. Finished flooring below the lowest elevated floor. The correct answer is A. NFI. P coverage excludes most basement components but provides limited coverage, up to $1,000 for sump pumps located below the lowest elevated floor. Reason B is not correct. Built-in appliances in a basement are excluded from NFIP coverage. Reason C is not correct. Electrical panels below the lowest elevated floor are not covered. Reason D is not correct. Finished flooring below grade is specifically excluded under the policy. Question 20. An owner of a single-family home located in Flood Zone B reports that the property had one flood loss 6 years ago and that the garage floor sits 1 foot below ground level. Under NFIP Preferred Risk Policy eligibility rules, which statement is correct? A. The property is ineligible because the garage floor is below the lowest adjacent grade. B. The property is eligible because it is in a moderate risk zone and has had no losses in the past 5 years. C. The property is ineligible because a flood loss occurred more than 5 years ago. D. The property is only eligible if constructed after 1970, making it ineligible. The correct answer is B. Preferred risk policies are available for homes in moderate to low risk zones, B, C, or X, that have had no flood losses in the past 5 years, and below-grade garage floors do not by themselves disqualify eligibility. Reason A is not correct. Having a garage floor below grade does not automatically disqualify a property under preferred risk guidelines. Reason C is not correct. Losses older than 5 years do not disqualify eligibility. Only losses within the past 5 years do. Reason D is not correct. The policy does not impose a post-1970 construction requirement for eligibility. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.